Hello everybody, in this video we are going to discuss audit of bank audit CA final course. So now in last video we are started some topics, we completed some topics. Now how can we verify various classifications or income recognitions or provisions of NPA in bank audit? Firstly, classification and provisions. In this video, how the focus areas, I will explain only the focus areas. Verify whether bank has a system of classification of advance through CBS without manual intervention. So they need to verify with CBS without manual intervention, and after that examine whether classification made by the branch is appropriate. So branch office is classifying with appropriately or not, we need to check out, and examine whether secured and unsecured portion of advance have been segregated correctly and provisions has been calculated properly. So they have advances, so that advances may be secured or unsecured. You need to see the whether the segregation is correct and whether the provision calculated properly or not. Next, review and compare date of NPA of loan accounts mentioned in current year statement with previous year. So what are the reasons for any changes should be ascertained. Next, after that, accounts regularized near balance sheet date. How can we regularize the near the balance sheet date? So firstly, in this case we need to check out as per RBI guidelines. What we need to check out? RBI guidelines. If account has been regularized before balance sheet date by payment through genuine source, account need not be treated as NPA. So they are from starting to and before 31st March, maybe take date 29th March, up to this there is no payments, and 31st March they paid the amount, so that the account was became regularized. Now we need to see whether this amount, source of this amount is genuine or not. If the amount is not genuine, even though they paid the amount, this account will become the NPA, that is non-performing accounts. If subsequently branch has provided further funds to borrower, auditor should carefully assess whether the repayment was out of genuine source or not. So we need to check if the bank was providing another facilities, that like extension of loan they are providing for cases, the how they are paying the amount. So if they are getting out of another loan, they are paying this one, and here they will getting and paying this account. So we need to see the genuine source or not. If accounts indicate inherent weaknesses, then account should be recognized as NPA. That is the when account became the regularized near to balance sheet date. Now, drawing power calculations, DP calculations. Here we need to ensure that DP as per guidelines formulated by board is there or not. We need to check out the guidelines formulated by BOD or not. And here for special considerations should be given to proper reporting of sundry creditors, stocks covered under that ELC and guarantees for calculating the DP. Next, after that DP need to calculate it carefully in case of working capital. We need to check out whether the calculation is correct or not. In case it is working capital DP, advances to company engaged in construction business. Next, stock audit reports should be reviewed, and special focus should be given to comments, whatever the comments was given by the stock auditor. So stock audit we need to check out. So here DP calculations, we are explaining the DP calculations. Next, accounts with some temporary deficiencies. So what can we need to check out in accounts with temporary deficiency? Here bank should not classify an advance as NPE merely existence due to some temporary deficiencies such as non-availability of TP based on the latest available statement. So normally these banks must maintain 3 months stock statement. If it is a quarterly, 3 quarterly stock statements based on the latest stock report. Because of some temporary deficiency, the DP was not met and balance outstanding was exceeding the limit temporarily and non-renewal of limits on due dates. This is then the become deficiency. It will be temporary deficiency. Now, however, the stock statement for determining the DP, however, the stock determine the DP should not older than the 3 months. We need to ensure the adherence to these guidelines. Next, limits not reviewed. Accounts where regular ad hoc limits are not reviewed within 180 days from due date and date of ad hoc sanction should be considered as NPA. So we need to check out whether the accounts was regular or ad hoc limits was reviewed or not. They need to review within 180 days. If they are not reviewed within 180 days from the due date ad hoc sanction, then it will become the NPA, non-performing asset. So that ensure that ad hoc or short reviews are not done on repetitive basis. Next, asset classification borrower wise. Ensure that asset classification of borrower wise is not facility wise. So they need to mention in borrower wise, not the facility wise. Here it is to ensure that all facilities granted by bank to borrower will be treated as NPA and not particular facility which has become irregular. So they need to ensure all facilities whatever the granted by the bank to borrower will be treated as NPA and not particular facility which we have been given to irregular. Next, another important one is government guaranteed advances. Here, if government granted advances becomes NPA, then incomes on such advance is recognized only when interest is realized. So if the government has government granted some advances, it was become NPA, so that when that advances interest will be recognized only when it is realized, not on accrual basis. Next one, central government guaranteed advances is treated as NPA only when the central government repudiates its guarantee, when it is invoked. Here only we are considering the state government but not the central government but not the state government. Central government guaranteed advance is treated as NPA if it remains overdue for more than 90 days. Here only we are considering the central government. Central government grant is treated as NPA only when central government repudiates its guarantee or invoked, but not the state government. In case bank has not invoked central government guarantee through amount is overdue for long, it should be duly reported in LFER. Even if the central government is not invoked and not paid any amount, so then we need to report it is in LFA or long form audit report. Next, agriculture advances. Here we need to ensure that NPA norms has been applied as per crop season. So we need to check out the crop seasons. It may be short term or long term on all direct agriculture advances listed in circulars. And for agriculture loans not specified in circulars, sometimes it was not specified in circulars, ensure that identification of NPAs has been done on same basis as non-agriculture advances. So if the items was there in circular, they need to follow the agriculture rules advances based on the like short term, long term crop seasons, not as per 180-90 days. If the items which are not specified in the circular, then they need to identification of NPA same like as non-agriculture advances. Next, Next, restructured advances. Here, restructured advances means restructuring is an act in which a lender grants concession to borrowers for a reason relating to borrower's financial difficulty. So, the borrower is there, one of the person, borrower is there. His position was the lender grants some concession to borrower for a reason this borrower financially is have some difficulty. Now it may involve modification of terms, so they will modify the terms of advance including the alteration. So they may alter the of installment amounts, repayment periods, rate of interest, sanctions, etc. Now bank may restructure the account classified under any categories. Bank cannot restructure accounts with retrospective effect, so they allow to give the effect on prospective basis but not retrospective basis. That is restructuring, and restructuring accounts will be downgraded from standard to substandard. NPA will remain the same category. This is restructured advance. Here what we have talked about the restructuring, it is one act where lender will grant some concession to the borrower who is the borrower having some financial difficulty, and here it may involve some modification of the terms and some also including alteration of installment amount, repayment period, rate of interest or sanctions, etc. Banks may restructure the account classified under any categories. Banks cannot restructure accounts with retrospective effects. Even though on restructuring account will be downgraded from standard to substandard, the NPA will remain in same category. Next, after that, sale of purchase of NPS. This is main important question here. We need to check out in case of sales or purchase. What we need to check out either what the main the items. First one, policy laid down by board of directors relating to procedure, valuation, delegation of power for sale or purchase. So what is the policy they are taking by the board for the purpose of relating to procedure, valuation, delegation of powers for sale or purchase? Only such NPS has been sold which remained NPA in books at least for 2 years. So if you are selling NPA, that NPA was stayed in books of accounts at least 2 years, and NPA has been sold or purchased without recourse basis. Here without recourse basis, what is meant by without recourse? Recourse means normally now one bank is there, bank will sell on recourse basis to other person. So this is another person or institution, and this person get amount from this borrowers or lenders, whoever the person's loan payers is there, from this person he will get. If this person was not paid, the bank will pay the amount when it has recourse basis. So that this NPS is not allowed that recourse basis. So without recourse they need to sell whatever the risk and rewards take by this person who is purchasing the NPS. Next, subsequent to sale of NPA, bank does not assume any risk relating to sold NPS. NPA has been sold at cash basis only, so always it will be sold at cash basis. Always it should be sold at cash basis, and bank has not purchased an NPA which is originally sold, so it is not allowed to purchase which already sold by the bank. Now, and special point in case of NPA, we need to require some main special points. One is NPA. So whenever we are selling, we need to check special points. NPA has been removed from books of selling the bank. So whenever the bank was sold that NPS, they need to remove that NPS from the bank's books of accounts. Next, if sale below the NPA, below the net book value, book value, below the net book value, the shortfall, whatever the shortfall you are getting now, that shortfall will transfer to profit and loss account. If some cases we are selling that more than the NBA one, then the excess amount we need to transfer to meet, we need to use, should not transfer this to PNL, we need to maintain in another account. This amount will be utilized for a future losses or sale of other NPS. This is sales related special points. After that, purchase related special points. Here provision should be made for NPA purchase as per classification status in books, purchasing the books. So you need to check out the provisions. Provision should be made by for NPA purchase as per classification status in books of purchasing. If there is any recovery from NPA, purchased in first adjusted against its acquisition cost and any excess has been recognized as profit. So if you are any recovery from NPA purchased, we need to adjust for acquisition cost. After that, if you have any amount, we need to recognize as profit. For capital advocacy, bank should assign 100% risk weight to NPS purchase for other banks. Next, here one question, test your understanding. I think questions will be explained in next video. Verification, we need to check out the another main area will be relating to capital and liabilities. So what are the capital and liabilities, others, non-banking, these all are not much important. Then this is the another topic where it is important, verification of capital and liabilities. Here capital means the capital has tier 1, tier 2. So here we have tier 1 and tier 2, the capital was divided into two tiers. One is tier 1 and another one is tier 2, capital advocacy. Now what is mean by tier 1, what is mean by tier 2? Firstly, tier 1 means capital consists mainly the share capital. What here they will consider share capital, is share capital and plus disclose reserves, and it has bank's highest quality capital because it is fully available to cover losses. So it is share capital plus reserves which is fully available to cover the losses. Next, in tier 2, what they include in tier 2? Tier 2 consists of certain reserves plus certain type of subordinated debts. So here some subordinated debts will consider. This is tier 2. Here these amounts will loss absorption capacity of tier 2 capital is lower than the tier 1 capital. So here the fully the bank amount and here involve the other parties amount. So this loss absorption capacity for tier 2 capital is lower than the tier 1 because this will cover fully, this cover partially. Now what is formula for capital adequacy ratio? Capital adequacy ratio formula will be what is the eligible total capital funds divided by the risk weighted assets, eligible total capital fund divided by the risk weighted average assets, and if there is any off balance sheet items, so off balance sheet items into 100 we will get the amount of capital adequacy ratio. Here RBI requires bank to maintain minimum 9% of capital adequacy ratio. This is the main information of capital adequacy ratio. So here we discussed about mainly the tier 1, tier 2, and tier 1 will consist of share capital plus reserves, and tier 2 consists of certain reserves and certain type of subordinated debts, and tier 1 will cover all losses, tier 2 does not cover all losses. So formula will be eligible total capital funds divided by the risk weighted assets and off balance sheet items, and maintain the 9% amount. This is capital. Next we have, after that capital, we need to discuss about capital advocacy. This is the main area. Tier 1, tier 2 we are completed, this formula we are completed. They are given some examples, and what is include the reserves and surplus means what is there, and audit approach for deposits. Deposits will contain current and saving from deposits. These are not much important. And after that, banks maintain borrowings. So borrowings are also important. Some borrowings means simply, here we need to obtain and verify confirmation certificate and other documents. So we need to the confirmation certificate and other supporting documents. We need to comply with external confirmation. So SA 505 external confirmations. Next, examine whether clear distinction is made between rediscounting and refinancing. So we need to check out the clear distinction is there or not for rediscount and refinance. Next, examine whether borrowings of money at short notice are properly authorized. So if there is any short notice properly authorized or not, we need to check out. Next, other liabilities and provisions. Important will there for bills payable. Bills payable means we need, for this bills payable we need to check whether existence of effectiveness and continuity of internal control over bills payable was there or not. So such control should include, what are the controls we need to check out. So first control will be draft, mails, transfers, etc. should be made out of standard printed forms. So they need to maintain standard printed forms. They need to maintain for this purpose, for to send drafts or to send mails. They need to maintain the standard printed formats. And if these forms, so these are standard printed forms. These forms, whatever the form they are using, these unused forms, if you are unused, they kept some standard forms. This, if they printed 10 forms, they utilized 8 and remaining they are pending. This is unused forms. These unused forms should be kept under the custody of responsible officer. Bank should have reliable private code known only this officer. So this officer only knows that reliable forms password. After that, signature on DD should be checked by officer within spaceman signature book. So we need to check out the spaceman signature. Next, examine sample of outstanding items in bills payable with relevant registers. We need to check out the relevant registers books. Next, after that, we need to learn about contingent liabilities. What is included in contingent liabilities? Here, contingent liability, firstly we need to disclosure requirement of contingent liability for banks will be required. What we need to disclose? 1. What are the claims against the bank not acknowledged as debt? We need to check out what are the claims is there, but bank was not acknowledged as debt. These are contingent liabilities we need to disclose. Next, liabilities which have partly paid investments. Liability which is for partly paid investments. Next, liability of outstanding forward exchange contracts. So if it is a forward exchange contracts, outstanding liability is there. Next, guarantees given on behalf of constituent in India or outside India. So they are given some guarantee on behalf of constituents in India or outside India. Next, acceptance, endorsement and other obligations or other items for which bank is contingently liable. These are the disclosure requirement for contingent liability. After that, contingent liability, this is contingent liability what we are explained. claims against banks not acknowledged that we need to check out what are the management responsibilities. So bills collection is not much important. Audit report. So now we should talk about auditor report. So every auditor need to send his report to central government, to whom it will be reporting to central government. In case nationalized bank, auditor required to make a report to central government, in which auditor need to state some following. So you need to mention these items. One is whether balance sheet. So you need to check out the balance sheet now. That balance sheet contain all necessary particulars and properly drawn up so as to exhibit a true and fair view of true and fair affairs of the bank. Balance sheet contains all necessary particulars and particularly drawn up exhibit the true and fair view of affairs of the bank. In case auditor has called for any explanation, or information, whether it has been given, you need to check out. Next, whether transaction which have come to the auditor notice. So auditor noticed some items, transactions are within powers of the bank. These are the items. And whether the returns received from branch of bank have been found advocate for audit. So the head offices will receive reports from returns from branches. So we need to check out whether it will be advocate for audit or not. Next, whether profit and loss account. After that, profit and loss account shows true balance. For balance sheet. It will be particulars relating to balance sheet. It will be true and fair. And for profit and loss account, it will be check out the true balances or not. And any matter which auditor consider to brought to notice to central government, he may give it to central government. This is the main area. And what are the reporting matters? Will under the Companies Act 2011. So now auditor of banking company is also required to state in report the matter covered by section 143. So section 143 you need to comply. What is there in section 143 matters? The matters will be simply auditor report shall also include their views and comments on following matters. So on following matters they need to give some comments. First one, whether company had disclosed the impact of pending litigations in financial statement. In bank's financial statement, they have some pending litigations. The bank must give the impact of that pending litigation, whether the impact of that pending litigation was disclosed or not, need to be commented by the auditor. Next, whether company has made provision for material foreseeable losses on contract. So company has made some provisions for material foreseeable losses. So they have some contracts, long-term contracts. The contracts may give foreseeable losses. The type of losses the company need to be required to maintain some provision. Whether the company is maintain the provision or not, auditor will check out. Next, whether there has been any delay in transferring amounts to investor education provident protection fund. So if we have dividend, for example, I will check the dividend. The dividend will be transferred to that person's account within 30 days. If the amount was not transferred, they will use some time. After that time, they need to transfer it to investor education protection fund. The that type of amounts is there. Whether the bank was delayed in transferring that amount, that need to be checked out by the auditor. Next, whether dividend declared or paid by the company is in compliance with the section companies 2013. Next, whether company has used such accounting software for maintaining its books of accounts. So dividend 123 accounting software for maintaining its books, which has feature of recording audit trail facility, and some has been operated throughout the year. Next, reporting requirement. Reporting requirement relating to company auditor are not applicable to banking company. That is CARO. CARO is not applicable to banks. Not applicable to banks. Next, we have LFAR form, long form audit report. LFAR is to be given by statutory auditor. Who will give? Statutory auditor. Statutory branch auditor, as well as statutory central auditors. So they will give the LFAR. LFR means simply branch auditors is in form of questionnaire where observations or comments have to be provided on range of matter. So they select some matters, and that matter they will give some observations or they will give some comments. So what are the matters may include cash balance, bank with balance with bank, investments, advances, etc. This type of item they will select and they will give some comments. These are submitted by the statutory branch auditor to statutory central auditor, and after that consultation is done at head office level, and LFR for bank is submitted by statutory central auditor to management. So SBA to SCA and SCA to management, they need to submit copy of LFR together with board views or directions. So he will submit to management, and management may be board, and board need to submit to RBI. How many days? Within 60 days of submission of LFR by the statutory auditor. This is the LFR case. So LFR from SBA to SCA, that is statutory branch auditor to statutory central auditor, and statutory central auditor to management or board. The board will submit to RBI within 60 days from this person. That is LFAR. Next, other reporting requirements. What are there in other reporting requirements and certificates? Here, statutory auditors also provide reports and certificates on some cases. Relating to report on operating effectiveness of internal financial controls. So internal financial controls over financial reporting. Report on compliance with SLR requirement. Report on whether treasurer operations conducted as per RBI instructions. Next, reporting on instance of adverse credit default ratio in rural areas, and certificate on reconciliations of security by bank. Certification of corporate governance, we need to check out. These are the important areas. The statutory central auditor, we need to report and certify on these following. Next, relating to concurrent audit. Concurrent audit means what? Firstly, concurrent audit means is an audit or where they will verification of some transactions or some activities. So they need to check verification of transaction or activities of an organization concurrently as the transactions or activity taken place. But it is not pre-audit. Concept of this audit is to verify authenticity of transactions or activity within shortest possible time. So it is simply say that it is similar to internal audit. Internal audit. Now, what is the scope of concurrent audit? Scope will be here. Detailed scope of concurrent audit and coverage of branches should be determined by inspection and audit department of banks with the approval of audit committee of board of directors. So ACB, we need to check out audit committee of board of directors. And we need to check out guidelines issued by RBI cover all key areas of activities of branch which is under concurrent audit. So they need to check out the guidelines by RBI. What are the key areas of activities of branch is there, and following areas like cash deposits, cash deposits, advances, investments, foreign exchange, housekeeping, and other items they need to check out. This is the concurrent areas. Next, concurrent audit after we need to type of activities like cash, investments, advances. So in advances, mainly what are the audit procedure? We need to focus areas in case of advances. So we need to ensure that loans and advances has been sanctioned properly, whether the loans and advances sanctioned was properly or not. Delegating authority. Next, ensure that security has been received and properly registered. So they have some security, and whether the documents whatever received, the property charged or registered was ensure that are clear. Ensure that post disbursement supervision and follow up was proper was there. So after disbursement they need to check out supervision and follow-ups. Check whether letter of credit, that is LOC, letter of credit issued or within delegated powers. So whoever issuing letter of credit, they must have the delegated powers. Check whether bank guarantee issued are properly recorded in register. So we need to check they have some bank guarantees, that bank guarantees record was properly recorded in register. And ensure that follow up of overdue bills. So if they have any overdue bills of exchange, you need to check out whether the bank was follow up procedure was taken or not. Next, verify whether classification of advances is done as per RBI guidelines. Next, after that, foreign exchange. Here for foreign exchange, audit procedures are focus areas in case of foreign exchange transactions. You need to check foreign bills negotiated under LOC, letter of credit, and check whether inward or outward remittance has been properly accounted. So you need to check out. Next, examine extension and cancellation of forward contracts for purchase and sale of foreign currency. After that, we need to ensure that balance in no stock account in foreign currency or within the limits. Ensure adherence to guidelines issued by RBI about dealing room of operations. After that, we need to ensure the reconciliation of no stock and worst account balance. This is main area. Now we talked about the concurrent audit. How we can appoint the concurrent auditor, that is appointment of concurrent auditor. Here concurrent audit can be done by bank's own staff or external audit. So it may be done by of his own officials, or they should give it to external auditor. If bank has engaged its own officials, they should experience, well trained and senior. So if they are giving it to their own, then person will be experienced person, that person will be trained person, that person will be senior person, and they must be independent of branch where concurrent audit is to be conducted. Next, after that, ACB, accounts committee board of bank shall decide maximum tenure of external concurrent auditor. Generally it shall not more than 5 years. So however, no concurrent auditor shall continue with the branch for more than 3 years. So we need to check out the generally it is should not more than 5 years. No concurrent auditor shall continue with the branch. If it is a branch, it will be not branch for more than 3 years. Next, if any serious irregularities are noticed in working of external concurrent auditor, their appointment may be cancelled and fact may be reported to RBI and as ICAI also. Next, reporting systems in concurrent audit. There should be proper reporting of findings of concurrent auditor in structured format. So they need to maintain some structured format. In structured format, they need to report whatever the findings they are getting. Next, there should be zone-wise reporting of findings of the concurrent audit to ACB. So whatever they are getting as a zone wise, they need to report it to ACB. Before submission of report to auditor, before submission of our report, auditor should discuss important issues. So if there is any important issues with the branch manager, and if there is minor irregularities are to be rectified in timely manner. If there is a serious irregularity, should be reported to head office. So we need to check out if it is a minor irregularity, they need to rectify in timely manner, and if it is a serious irregularity, should be rectified to head office for immediate actions. If fraudulent transactions are detected, if the fraudulent transactions are detected, they should immediately report it to inspection and audit department of bank and chief vigilance officer and concerned branch manager. Follow-up action on concurrent audit report should be given high priority. This is the main core area of the bank audit, and in next video we will continue with the NBFC provisions.